Good evening, folks, and welcome to our strategy session for week ending November 18th, 2022. In this video, we're going to do a quick recap of last week, and then we're also going to go over what stocks we're looking at going into the shortened holiday week next week. So stick around for that after the intro, and in the meantime, please hit those like and subscribe buttons. All right, so let's start off with some overall market conditions. So looking at the SPY, what we can see here, obviously still in a longer term downtrend, but once again, we're in the short-term rally. So is this one going to be just another bear market rally like these previous ones were, or is this one going to actually hold? That's still to be determined, but we're going to go over some of the things that we're looking at and some of the things that we see a little bit different in this one from some of the previous rallies. So first thing, let's start off with, similarities. Again, we're getting really close to that 200-day moving average. You can see that was resistance last time. And now we got to see if we're going to be able to break through that or if that's going to be a resistance level again and push us back down to lower lows. Now, one thing that we do notice that's different about this rally from the previous ones is this low here on October 13th. One difference there is you can see that the stocks opened way lower that day, but by the end of the day finished very green, very positive. So not only did they finish green and positive for the day, but we got a really nice bullish engulfing candle. And not only was it a bullish engulfing candle, but really it took out the last 3 days of selling and closed above all those levels. So that is a change in character. If we look back throughout this entire bear market, we did not get a candle like that on any of these other previous lows. If we zoom into this section here, the closest that we came was this day here. But as you can see, even though we did get a nice rebound, we did not close above the previous day's high. We did get a little bit of a rebound over the next few days, a pullback, and eventually a move up. But again, this candle that we got on December 13th is different than this one, and definitely a change of character for this chart. So something to take note of. We'll see if it actually means anything or not, but just keep note of it for now. Now, there's nothing to say that this chart couldn't pull back, let's say to the 21 EMA or even down to the 50 EMA. We could get a pullback kind of to these 380 levels to close this gap down in this area and then get a bounce from there. Or we could get a push off of the 80 EMA and a straight breakout above the 200 day. So really, until we get some more signals, it's not clear which way the market wants to go yet. So definitely something to keep an eye on and just look for those triggers either to the upside or to the downside. So before we get into some stocks, just a few indicators I want to look at. Let's start off with the VIX. So what I want to point out on the VIX is that, we have this trend line where we seem to get rejected every time around the $35 range. And we also have this upward sloping trend line that's been acting as support. Now, we did get this one break where it lasted a few days below the trend line and then came right back up and almost got all the way to the $35 level, but not quite. And now we're getting another pullback. Now, this could be the first sign, the first shot across the bow that something could be changing in the market. So we'll just have to see if this actually means anything or not. But the fact that we're below this trend line again and trending lower is a good sign. So you can see as we broke that trend line, we came back up, tested the trend line from the bottom, and now seem to be breaking down again. So what we're looking for now is we want to watch and see if the VIX can get below this previous low of, let's say, around 2240 and start making some more lower lows. Now, if we look at a slightly shorter time frame, if we go to a 4-hour chart, one thing I want to point out on here that is a little bit concerning. So if we look at the RSI, we can see that over the last few days, the VIX has been trending lower. However, during that time, the RSI has actually been making higher lows. So we want to keep an eye on that and just see where it goes from here. Is this really a bullish divergence with the RSI, or can we get a breakdown lower and get the RSI to get back into that oversold territory and continue lower? So just something to keep an eye on. again, if you haven't seen my video on the RSI indicator, take a look at that and it'll explain in more detail what I'm referring to here. But this is just showing that there's a potential change in trend when you see this type of divergence. All right, now the other indicator I want to look at is the US dollar. So similar to the VIX, we can see, the US dollar, it's been in this really nice uptrend, and then it has started to break down. So now we would like to see a continuation of this breakdown. Obviously a drop in the US dollar is good for stocks and equities. So what we'd like to see is, we did get a breakdown of this low back here around 110. We got a breakdown over here. It came back up, retested the downward sloping trend line, and then broke down this low around 109.50, and a pretty sharp drop after it got down below that low. So it's making a little bit of a flag pattern here now. What we'd like to see is a break below this trend line and a move down lower. Now, is the 200 going to act as support? Well, we'll have to watch and wait to see what happens there. Or can we get a break below that 200 and continue lower? Okay, and finally, the last indicator we want to look at is the TLT. So we want to look at the bond market. Now, before we can get any kind of real reversal in stocks, we really need to see the bond market stabilize. As you can see from this chart, it's been in a very long-term downtrend. But we do see some constructive pattern building over the last several weeks. The low that we made was back on October 24th. Since then, it has put in a higher low and then broke above this previous high of 97.81. So we do have a pattern now of higher lows, higher highs. We want to see that continue, or at least at a minimum, like to see this trade sideways for a while. If we can get some stabilization in the bond market, that would really help equities start to move up. So between the VIX, the US dollar, and the TLT, we are starting to see some bullishness for equities. Some constructive patterns that we'll just have to keep an eye on, see if they can continue, and see if we can get another push higher in the market. All right, so now let's go look at some stocks. So let's start off first with, I guess, what you don't want to be in. Look, the stocks that were the real big winners over the last several years, especially in 2020, 2021, those are not necessarily going to be the stocks that are going to lead the market on this next bull run. In fact, they're probably not going to be. So if we look at stocks at, let's say, Amazon, you can see Amazon, really big downtrend. And what's really important to note, if we look at here the last several days or the last couple of weeks, Amazon did not participate in this rally that the SPY did. So while the SPY is all the way back up, just under its 200-day moving average, Amazon really didn't have much of a rally. It barely bumped up against the 21 and immediately turned down. So definitely not something you want to be in, not something you want to be looking at. Similarly, ARK, again, this was a high flyer, up until about 2020. And since then had massive pullbacks. And it did seem like it's starting to go a little sideways. But again, didn't participate in the rally that the SPY just did. It's well below the 200-day moving average, really just trading sideways. Another one that you do not want to be in, Meta, same kind of thing. Big pullback. It's down near its 52-week lows. Little bit of a bounce here, but again, just barely got over the 21 EMA. It's nowhere near the 50 or the 200. Really didn't participate in this last rally. So these are not the stocks that you want to be in. So really, if you're buying this stock now, if you're buying around these levels, that means you're expecting the stock to do something like this. And look, that's just not realistic. There's so much pain in this chart. This was a very steep sell-off. There's a lot of people that are underwater. There's no way this is going to do a rally like this. So, this is definitely a stock you want to stay away from for now. All right, so what stocks do you want to be looking at? Well, look, this entire year, if we look at oil and gas, it's way outperformed the market. If we look at a stock like Apache, ticker APA, just zooming out on this chart, we can see it's right at its 52-week high. The only thing I would caution about this stock is, it is coming up, like I said, right at its 52-week high. It is coming up into previous resistance zone, and it is showing a little bit of weakness here. Now, that's not to say that, this is a topping pattern. It very well may be, but, we don't know that yet. But what I am saying is that I just wouldn't buy it right at this moment. I'd want to see if we're going to get more of a pullback or if we're going to get a breakout above this resistance level. Now, one thing that does have me just a little bit concerned, if we zoom out a little bit, and let me just expand this chart down here. So if we look at the RSI, we can see that since back in, I guess that would be around October of 2021, this stock has been in a really nice uptrend. Peaked around here in June, bit of a steep pullback, but not overly bad, and then now back right up at its highs. But while it was doing that, you can see that the RSI has been consistently making lower highs. So again, we could be getting some bearish divergence there, with lower highs on the RSI, higher highs on price. That could indicate that we, could be at least in a short-term topping pattern. So I wouldn't buy the stock right now. At the moment, I would just watch it. You want to watch and see if we get a pullback, say maybe down to the 50-day. And then you'd want to see some kind of confirmation that we're actually bouncing off of the 50 before you get into it. Or alternatively, you could just wait to see if we can break above this level. You can see I have an alert set at 49.51. That's an important key level to watch. If we can get a break above that, then we should be able to continue the next leg higher. So similarly, if we look at CHK, so Chesapeake Energy, this one actually maybe looks a little bit better, only because we have a tighter pattern here over the last several weeks. Again, we're right at the highs. So we had this high back in May, so I guess May 31st, pullback, and then came right back to those highs and been trading sideways ever since. Actually, I think I like this chart a little better than Apache. Again, you can see I have an alert here set at 104.82. So I'd be watching to see if we can continue trading sideways for a while. Ideally, the longer we trade sideways, the better of a base that we're going to build. And once we get that breakout, it should result in a much stronger move. All right, another stock we can look at is CIVI. So this one, again, really nice sideways pattern. It's been consolidating for quite a while. If we zoom out here a little, you can see again, it's relatively close to its 52-week high. That high happened in June. We got this pullback, bounced back up, and trading sideways ever since. Now, the one thing I'll say about this chart is when you compare this to some of the other energy or oil stocks, the one difference is that this one hasn't made it to this previous high yet. So this previous high from June at 84.76, we haven't quite made it up to that high yet. So you have to kind of wonder, if other stocks have made it up to this high, or I think we're going to look at a couple here that have actually broke through that high already, why hasn't this one? So the one concern is if we do get a pullback in some of those stocks that have reached their previous high, this could likely pull back also. So again, I would just watch this one. I have an alert set at 71.37, but I would just watch for a breakout above that level before doing anything on this one. All right, we can look at DEN, so Denbury. Again, this one I think is a little bit better than the previous one that we looked at, only because when you zoom out, again, you can see we're pretty much right at the 52-week high. So we made a high back here in August, pullback, and this pullback actually wasn't quite as steep. It slightly broke the 50-day, but only really stayed below the 50-day for 3 days and came right back up. And now when it came up, it actually made a new high. So it broke the previous high, and since then just been consolidating sideways. So I actually really like this chart. This is, I think, out of the ones we've looked at so far, this is probably my favorite one. If we can get a little more sideways action, you can see that the 50 has now held 3 times. If we can get a little more sideways action, just build a little bit of a longer base here, and then get a breakout above this 96.74, I think this one could have some really good potential. And the last one in this sector I want to look at is Schlumberger. And again, we can see on this one, we made a high. Well, here, let me zoom out for a second. So we made a high back here in June. This one was a pretty steep pullback. We actually ended up below the 200-day for quite a while. Actually, the 200-day even acted as resistance a few times before finally getting above it, got below it again, and then finally a nice rally. But again, what I like about this one is that this high back here in June of, let's just say just under $50, we have broken it already. So even though we had this pullback and some sideways consolidation, big run up, and we are above those levels still right now. So ideally in this chart, what you want to see, again, this is a pretty short base. So the ideal scenario in this chart would be if we can get another week, couple weeks, maybe even 3 weeks of just sideways action, give some time for this 50-day to catch up. If we can, ideally the 50-day is going to move up like this. If we can have the price action just continue sideways until it gets to this 50-day, tags it, and then breaks above, I would set an alert, let's say right around here. So we'll create an alert at 54.92. And like I said, the longer base we can build prior to that breakout, the better chance that this stock will actually continue higher. So that's the oil and gas stocks. I mean, you can look at a bunch of others. They're all very similar in pattern, but these are some of the ones that we're looking at going into next week. So other than oil and gas stocks, the other industry that I really like is the metals and mining. So I'm going to bring up the ETF first, so XME. And what I want to point out on this one, well, actually, let me zoom out first. So what I want to point out on this one is we had this really long consolidation back here in 2021. And after that consolidation, huge move up. So, I mean, from the lows of this consolidation to the highs, I mean, we're looking at it like 64%, 65% move. So really nice rally up. Now, we did get it, just as big of a pullback. But what's interesting to note is that this low never broke below this consolidation level. So the previous lows of 2021 during the consolidation have held so far. So if we zoom in a little bit, we can see that was the low of the, after this massive rally, big pullback, that was the low. We rebounded, and then we did print a higher low. So printed a higher low, another rebound, and now we did make it 2 times already above the 200-day moving average. Little pullback, so we're just slightly below now, but we can see these moving averages really starting to tighten together. The one thing I'd say, it'd be nice if they were stacked in the correct order. Right now we have the 200, the 8, the 21, and then the 50. If those averages were in the correct order, and then we can get a breakout above this previous high of 53.77, that would definitely be something that you could look at going long in. For now, I would watch it, and even if the averages don't straighten out, I have an alert set at that level, and I think on a break of that level, I would definitely be bullish on this sector. So let's take a look at a couple stocks that are in this sector. Let's start off with U.S. Steel, so ticker X. Now, X, similarly to the ETF, had this long period of consolidation. It does trade a little more volatile than the ETF, obviously, but you can kind of see this pattern of consolidation here, the big rally up, big pullback. X actually did undercut the lows from 2021, so it did undercut them a little bit. And then let's zoom into this area here. So after this undercut, we got a rally up to the 200-day, a pullback. Now this was a higher low, and now we're trying to move up again. So one thing to note on this chart, the 200-day, ever since we pulled back on after this rally and we had this pullback, the 200-day has acted as resistance. So you can see here where it's 1, 2, 3, 4, 5. This is the 6th time that we're testing the 200-day from the bottom side. Now think of it this way, support and resistance levels, it's kind of like, how many times can you pound your fist on a piece of glass before you finally break it? Support and resistance kind of works in the same way. The more times you test a support or a resistance level, the more likely is eventually you're going to break through. So what I'm looking for in this one, we're right at that 200-day moving average now, or just below it. So I have an alert set here at 24.76, and I'm looking for a move. Either if we can get a bounce off of this 8 EMA and get a move above the 200-day moving average, or if we got a bit more of a pullback, say down to the 21 EMA, that would actually close this gap. We do have a gap here right around $22. So if we got a pullback to around $22 and then a move above and a break above the 200-day moving average, that would be a pretty bullish signal. And the other one in the sector I want to look at, pretty similar chart for Nucor, ticker NUE. The only difference with Nucor is that it is actually above its 200-day moving average already. So, basically same as the last 2 charts we looked at. Had this long consolidation period in 2021, huge move up, pullback. Now again, this one, this was actually better than the previous 2 in the fact that, if you remember, XME came down pretty much right to the bottom of this consolidation period and tested that level and then bounced. X actually undercut it and then bounced. Well, if you look at Nucor, it only came down about halfway of that previous consolidation. So this pullback actually did show the most relative strength within that sector. Now, after that pullback, it immediately got back above the 200-day moving average. One more pullback down. You can call it a double bottom. It's actually looks like just a slightly higher low, but basically a double bottom. And now moving back up right to that resistance level again. So on this one, what we want to see, I have an alert set at 145.22. Basically, we want to see a break above that level to continue the next move up. And again, we can get a little more of a pullback. Actually, this would be really nice if it just continued in this sideways chop for, say another week, couple weeks. Just build a little more of a base, kind of like what we did here, or even longer than what we did here. Build a little bit of a base. What would really be nice is if we could get this 50-day to start curling upwards. So if the stock price could just continue sideways for a while, that would actually allow the 50-day to start to curl upwards. Again, the averages aren't in the correct order. We got the 8, the 21, the 200, and then the 50, but at least they're mostly pointing up. So if we can get some sideways action and then a break above this 145.22, that again would be a pretty bullish signal. All right, and the final stock we want to look at is ENPH. So this is in the renewables industry, solar. So with this one, it's a pretty choppy chart. This does trade with pretty wild swings. You can call this a consolidation area, but this was really wide movements, and it had a massive breakout, massive move up. If you look at from, even just from this low here up to its peak, that's 154% gain. So it had a massive move up, and now it's just consolidating sideways. This was a little bit more of a pullback than I would have liked, but it could have just been, an earnings expectation. But other than this pullback, you can see this support line is actually held, it held here, it held here, held here, held here. Get this breakdown below it. But as soon as we got back up, again, you can see that it's testing that same support level, and this time it held again, and now it's starting to move up. What I like about this one is, the moving averages are all in the correct order. We got the 8, the 21, the 50, and the 200. The 8 and the 21 are really pointing upwards. The 50 is kind of flat, so we'd like to see that start to curl a little more. The 200 is pointing up. So this one actually looks pretty good, pretty primed for a breakout. Again, what I would do is I would set an alert, I'd say right around here. So if we do that, go create alert at around 318.06, get that set. We're really close to that level now. So I would definitely keep a close eye on this one and see if we can get a break above there, and ideally close above that level. And then you could initiate a long position on this one. So those are the stocks that we're looking at. And again, next week is a short week. Usually holiday weeks do have lower volume, which could lead to higher volatility, more price movements. So just be cautious of that. But yeah, so these are the stocks that we're looking at for next week, and probably for the next several weeks. If you have any other stocks that you want us to analyze, post those down in the comments section, and we can do a video on those, kind of give you our feedback on what we think. And other than that, please hit those like and subscribe buttons, and we'll see you next time.